detector results are in.
Hey, what's up, everybody? Good morning. A little bit of a late start here, but let's get going. Oh, my bad. You can't hear me. Oh, why was my microphone muted? Hey, what's up? Is that better? A little bit better. All right. Kind of a medium day here. Markets actionable inside of here. I always take a bear zone balance inside of inversion. We know that from our rules. From probability, it's pretty good that it opens in the middle. At least from here to the middle is a scalp. That's our new probability rule. We did that in our lifetime seminars. But it's only 10 points across the gap, so it's not really worth taking if everything else is looking booty, and everything else is kind of looking booty. There's no irrational signals. All the lights today are green, which is good. I do like that. Bearishness off of 427.5 on QQQ. This is downward pressure from monthly hedge. Monthly hedge resilience is still negative, so we're going to try to see if we can get some push. It's trying to get pushed now. I'm sorry, not negative. It's positive. Positive. Okay, that's good. So any interaction point between here and here, probabilities are much higher on a break if the monthly resilience is positive. So with NASDAQ, it's 15.8, top of my screen. S&P, it's 997. That's looking pretty solid for the bounce. So this is a long setup at 501, probably scalping inside the range. Not a terrible idea. Morning. Does UVXY have a reverse split? Have nothing to do with triple V on the VIX. Let's calculate that really quick though. Gotta do that anyways. So you go to Tuesday's session close right here where this little gap is. You see between the two contracts. That's it. Do that. I think your summer runs so slow. Thank gosh we created a trading platform that doesn't. Goodness gracious, come on. There, and that's it. I need to clean up all these old ones. I just left them there so I can do a case study. What is number here? 1807. Okay. Then you come through here and then you just draw your line. That's it. 1807. I'll fix that up later. So here, keep an eye out. Monthly resilience is negative. It's not a long setup anymore from here. So just let it fall. I'm not going to do anything. So when you get to here, if this monthly resilience number is negative, I'm not going to take a long. So we already got hedge pressure break, monthly hedge break. We'll sit out on this one today. That's all I'm going to do. Nothing. Let it fall. Yep. If we look for the break, it's further downtrend. So in either case, there is nothing here. So right here, this number, the yellow number tells me if it's going to break or hold. And it's just bouncing around up and down. You can see there's some stock that's right on the edge here. So let's kind of make sure we monitor that. Go to your scanner, go to monthly hedge pressure break, down, click that, distance to monthly hedge pressure. Now you can see which stocks are right on the edge. eBay, IBM, any big ones today? Bank of America, AMD, Nvidia, these are ones around the edge. So check Microsoft, that's the one bouncing around right here now. So this is bad. Market's going to fall and continue to fall. So no longs today for me. That's good. It's a short stream anyways. Hey friends, make sure you hit the like button. Give that algorithm some love. Okay, 1 second. Making some place changes. Yep. So this market opens, falls, MHP break this close to expiration, let it go. Friends, family, hit that smash that like button real quick. If you could do me a favor. Nasdaq lower target today is D band right here. This is that first touch it's going to hit. Yeah, so this is good. You get the signal right out the door that's going to fall. Let it fall today. Okay, got about a 7,541 target on Nasdaq. 17,541 DD band, lower Nasdaq target. S&P lower target. $50, 29. S&P. Yes. Okay. How monthly maps looking? Take a look. Okay. Still bearish. Ooh. Still bearish, baby. Bull side slipping up. Actually, let me I missed the inflection point here. Bull side slipping up. Bear side sloping up. It's still a week of bearishness. At least 1 week of selling. Bulls are fleeing quickly. Bears are shorting harder. This is a very, very illiquid move. So the illiquidity is going to be paired with high volatility and sharp sudden spikes, dips really quick, etc., etc. Right about here are my mouses, which is a week out. You kind of start stabilizing a little bit. So the bull side is back and the bear side is fleeing. So it's going to be probably a quick 1 more week of just flush, and then it's going to kind of stabilize. And then it looks pretty normal going forward. Now, again, this is choppy and what it is. See how it's kind of patchy in the middles here. It's transitional. So normally we don't have clean splits and the market gets all kind of like bunched like this. It's transitional. So in the transitional phase, you can see that the market's starting to change its mind a little bit. Doesn't mean it can't recover by the time you get there at that point in time. But when you look at it, the bigger bull market stuff is in here. It's still kind of there. The bear market, well, it's kind of like all over the place, right? This is very inconclusive with high volatility. At least in the future. Now, again, it could just because it's too far in the future and everybody's hedged right here. As people move into here, this will start to smooth out. But at least for now, it's very easy to see what we have on the screen. You get markets, bear side, bull side and bear side both are doing this. So when the way that works in monthly map is if you look at the thing that we give you, the little cheat sheet, it'll tell you that bull side liquidation typically always means selling for that many days, for another week. Each one of these is a day in time. And then right about, you know, the first Friday after. Now again, once you get through monthly expiration, the very next day it could just change the whole landscape drastically as people roll into the new month. But this is very possible. That's what I think. So dip before rip. The overall bull market's not dead yet. It's wounded pretty bad. But it's like 1 tick away from being bear market. Opening above monthly hedge pressure, we consider that to be bull market-ish still. Crashing below it, bear market is back. DD ratio 0.38, bear market is back. Monthly map, bear market is back. Those are the 3 things that we look for. So it's bursting into bear market now. So all 3 of our greater market signals are bearish. Below, again, repeating, below monthly hedge pressure is that bearish hedging on the monthlies on Spire or QQZ or whatever. PE ratio means the amount of stock market cap and the S&P less than half is also in a bear zone. So majority of the market cap in the S&P is now in a bear zone. So itself is in that put territory. And the monthly map showing how it changes over time, bearish for a couple of days, right? A week or so. So all three of those signs right now are bearish in the go-to market. So buying dips, it's like essentially, if one were to say, man, I want to catch the bottom, this is the part where we're catching the bottom as the volatility blow up an account. Because there's not really a lot of bulls coming behind you to buy. So when I see times like this, again, it's not financial advice or anything, I just wait it out to be bullish. Scalps possible as long as all the items are there. Like today, a scalp from here to here was possible. We usually always take that unless hedge fisher resilience monthly is less than 0, which it was. So I would have bought there and then it just fell right through like a rock. So the yellow line and white line are predictors at these two lines. What they do is they predict the behavior. This is aggregate calculation. Where did my drawing tool go? The white line is the predictor of what happens at this white dashed line. The yellow line is the predictor of what happens at this yellow line. If the S&P falls to the middle and that white number is not greater than 0, it's going to fall right through. And you see it was pressing less than 7, -7, pushed right through to fill the gap. Hit this guy along the way, that number is -10, just pushed right through. So these are, we call them resilience because it's going to predict the resilience of those supports. You have the resistance to the market, how strong they are to stand their ground. And with the stocks plowing through their supports, the index is likely to fall with them, right? And so we saw that behavior today. It's pretty simple to avoid that move. So remember, cheat sheet. This behavior is predicted by that number. This behavior is predicted by that number.
The commerce platform designed for entrepreneurs. Online, on social, in person, and
It's got it. Pretty simple. So today, there's no actionable setup. The only actionable long takes place if 502 was re-achieved with support on an event or something, then it's a long from there. Other than that, the market's gonna fight inside of this range I'm circling and just kind of be random from here. These liquidity pockets, when you kind of open in between bull and bear zones, are already random enough as it is. As the market randomly decided to zip down, it's just not as actionable as you like it to be. These bear markets are great. As you see, I'm not really taking any action in any of them. As you see, I've been smart enough to say I'm going to sit out. So that doesn't mean I'm going to go out there and try to short and make a ton of money for not ever seeing me attack every single thing trying to go long. You really haven't seen me try to go long. Last time I tried to go long was this day right here, and then that happened, and then I got out, and I haven't tried the long since because all the signs are showing the bearishness, right? We can see that with the rocket scooter. That's what's great about this place. So I went on vacation to my mom to the surgical center yesterday. Nothing. I'm not looking at it. I'm not staring at it. I know it's going to be nasty and gross. Now one can say, why aren't you trying to short it? Is this? I'm not a big fan of shorting markets in a challenge account. Shorting is volatile. Volatile is big, giant sweeps, right? Bull markets are nice and steady and easier to trade. Bear markets require a lot of patience. You have to hold it all day or hold it through volatility. It's squeezed really hard before it goes your way. It's a lot harder to trade. It's more like I'll do that in my big account. Not a big fan of doing that in a challenge account where, you know, prizes are online. You want to win a game, the contest people are doing, then you want to trade where it's easiest, highest probability of winning. And obviously just like waking up in the market, just, you know, diving 20 points in a 10-minute span is not, it's fun trading and definitely worth if you have a big account with a big buffer. But when you're trading like a challenge account for a contest, you know, you don't want to see that account have big wild swings for sure. So I'm like, oh, it's going to fall. Let me just wait till it stabilizes. And every day it's like, wait until it stabilizes. And so we can see this every day. You can see me waking up every day on these streams saying, okay, it's time to buy the dip. Everyone, let's do it. You know, I'm waking up, being cautious about it. And we can just see this coming from a mile away. We could still see it coming from a mile away. It's still going to fall. Maybe not today, maybe not tomorrow, but I know the sign that tells me it's done falling. And today there's plenty of signs of that. Number one, this goes greater than half. We support here and keep going. That's the breakout target today. The equivalent there would be NASDAQ and grabs here and keeps going. It's about the same spot. So we need something to push it. So right now, all telltale, all signs are here. Tell me that it's going to resist there. So one day I'm going to wake up. Market's going to, I'm just going to watch. I'm going to set an alarm right here. And as soon as it breaks up, that's that big swing up that you want, right? Everybody always says when it's falling out, when's that big swing up that you get that one big green day that just pops right out, right? So the signs are, it supports bull's territory and keeps going. And then this supports monthly and keeps going. That's it. All right, you guys, I got to run in just a little bit. I got a session at 9 o'clock. So I got to run. Anything you want me to look at before I go? I think my mandatory grapefruit juice. Remember, monthly expiration's Friday, so anything can happen. Love you guys. We'll see y'all tomorrow.